we've been lied to about how taxes actually work. And all these people over time just keep saying, oh, just buy real estate to save on taxes. Well, I bought a $3 million building last year to save on taxes, just for context. And I probably ended up saving $20,000 of taxes, okay? And I paid $1.1 million cash. And the reason is because my full-time income is not coming from real estate or real estate investing. I therefore do not have the same tax benefits that someone else does who full-time does real estate from real estate itself, right? So I get a fraction of the tax deductions that someone whose main income comes from real estate. It can't be my side income. It has to be my main income, right? So the way around it is like my wife invests in real estate now. Therefore, we share one tax return. Therefore, I can write off all the same things that a normal real estate person would, right? But if it's just me and my side thing is real estate and my main thing is marketing as an example, I cannot actually write off the same amount of real estate that other people whose only job is real estate. So we've been lied to this whole time. So I hope I save you $1 million mistake just from that alone. But that is why this strategy is so powerful, because this works for anyone who has a business. In today's video, I'm going to be going over one extremely secret and advanced tax strategy that most people don't know about. Now, just to be clear, this isn't real estate. This isn't writing off an office inside of your home. It's not the typical stuff that everyone preaches to you about, right? This is something that it took me years to learn. I paid different financial advisors. And then once I realized this was a possible tool to use in the United States for taxes, this has been one of my favorite tax tools yet. And it's honestly such a cool concept that it's like impossible for me not to share it. Just to be clear, I'm not a financial advisor. This isn't actual legal or tax advice at all the disclaimers you need to know in the world. Don't listen to me. I don't know anything. With that being said, let's jump right in. So this strategy is called captive insurance, okay? Now, the concept, before I start drawing it out for you visually, is that you're able to create your own private insurance company that you own, right? Just like Geico, State Farm, Allstate, all these companies, right? You can create your own company that you own that's an insurance company. And the cool part is the income that the insurance company makes is not taxed, okay? So let me give you a scenario here. I'm gonna give you like my scenario, right? So let's just say my company is called Bad Marketing, okay? And in Bad Marketing, you know, I have a bunch of employees. I have contracts with people who are customers. I have a risk of certain events happening, people dying, losing customers. I have risk of equipment, someone breaking in and stealing all our equipment. Risk, right? So I have all this risk that I don't insure, and you probably don't insure either. I'm sure you don't have insurance for if someone leaves your company, right? That's super important. Or if you lose a client who's got a super big contract, etc., right? There's so much risk in your business that people are willing to insure, right? So what I did was I went to a third-party company that's only job is to underwrite, meaning telling me how much my insurance policy should be worth. So give me all the lists of all your top employees, how important they are to the company, your top contracts, how much equipment you have, etc. And then they come back and they say, okay, if you want to take all the policies, we're able to insure you up to $600,000 worth of premium insurance payments a year. That means like monthly payments that I make to the insurance company. So to draw this out, Bad goes to insurance company, make it a square. And the insurance company, basically Bad is paying the insurance company a monthly payment. And in return, the insurance company is securing Bad of its risk, right? Now, all this money that Bad pays to the insurance company is actually tax free. So you can imagine if every year I'm able to take, you know, $500,000, just to keep this easy, of policy that I have and pay it to my insurance company to then insure Bad Marketing itself, right? So Bad Marketing is paying the insurance company. The insurance company cannot be owned by Bad Marketing. It is owned by Eddie, okay? And then all the money that I'm paying to the insurance company is tax-free. So basically, let's just say for example's sake, I made $1 million that year, and I wrote off all the other tax write-offs that I can, the ones everyone tells you. And then I also do this strategy that's minus $500K of taxable income, which makes my income actually $500,000 instead of $1 million, right? I've just saved in taxes, if I'm getting taxed at 40%, I just saved $200,000 of payments to the IRS. Now, they're like, oh, Eddie, what's the trick here? There's got to be a catch. Let me tell you the ups and downs of this. The cool part is if this money is in the insurance company, let's call it $500K. A normal insurance company has that money as long as they can put it in liquid assets. then they can do what they want with majority of that money. I'm not going to say all of it, but majority of that money, right? So for the example's sake, let's just take 400K I can play with, and 500K I have to, or 100K I have to keep in the insurance company, right? The cool part is this 400K I can actually put into liquid assets, right? So I can put it into bonds, I can put it into treasuries, I can put it into stocks, I can put it into crypto. So right now, my money that my insurance company holds is in very safe crypto assets, stock assets, and US treasuries, right? So this money isn't just sitting there in an insurance company. I can actually go and use it to grow while it's still owned fully by the insurance company. Now, here's the real kicker where everything gets really fun. After 12 months of this money being in my insurance company, okay, 12 months have passed, and this company is in my insurance company, now I can actually take that money out and do things with it. So option one is I take it out for myself. So let's just say I'm gonna put two options here. Let's say take out. Option one is I pull it out and I get taxed capital gains tax. So reduced tax. So I'm not paying the full, 40% that I would pay. I'm paying like 15%, right? 20%. So it's gonna be less. So this is after 12 months. Or option two, loan it to yourself, at a 7% interest rate, just an example. And by the way, you're paying the interest back to your own company at the end of the day, and the interest is tax deductible. So you can loan it back to yourself, okay? So Eddie now, after a year, can go take $400,000 loan from insurance company to go buy real estate, to go do business with it, whatever the case is, right? As long as it's a justifiable investment or loan that a normal insurance company would make, because most insurance companies, guys, are like banks, right? They actually just have a fuck ton of money and a fuck ton of policy, and they just have a massive pool of money that they're paying out people from, right? And so it's in their best interest to make their money work for them, right? So a normal insurance company would go give a loan for someone else for a business or real estate at a fair interest rate because it makes sense for them, right? They would invest their money in a stock portfolio or a crypto portfolio that's safe to grow the funds that they have, just like a normal bank, right? So these are all normal activities for an insurance company. So I can go and loan it back to myself and I can do stuff with it, or I can keep the money in the insurance company. As long as the money stays in there or I'm loaning it to myself, I'm still paying 0% tax on all the money that's in there, right? And the cool part is I'm deducting it as an expense for free. I'm putting it in an insurance company that I own. And at any point in the future, I can dissolve this insurance company and I can just pay capital gains tax on all of it, right? Again, I'm not a financial advisor. There may be some details missing, etc. That's up to you. That's go talk to your financial advisor, etc. But I want to open your eyes on what a captive insurance company is, because it's honestly one of the coolest tools for saving money on taxes. Now, I'm sure you're asking the question, what if someone actually has to pull this insurance policy? What happens, right? So here's how it works. There's a giant pool of money that all these captive insurance companies like mine share. So we all put our money in this pool, right? And essentially what's happening here is whenever someone has a claim, it's pulling from the pool. So really what's happening is, like, let's just say you have your own pool here, and this is your pool of money. Whenever someone pulls an insurance policy, it takes a little bit, then 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 it takes a little bit. And let's just say like 3% a year or so, 4% a year max, goes to like the shared pool of insurance, right? And you can also participate in it. If your company needs to file a claim, if bad marketing here needs to file a claim with insurance company, then I can go file a claim, and then insurance company will say, okay, that's worth $150,000, right? I'll give you an example here for example's sake. The first 50K will come from my insurance company. The next 100K will come from the pool. And then the next 100K will come from my insurance company, next 100 from the pool, etc. Right? So it's a shared resource. That way no one's taking a brutal hit if they have to file their own claim, but also no one's losing a ton of money if they're filing a claim as a pool, right? And so that gives us more money as insurance companies. It lets us play a little bit differently. But this is one of my favorite tax strategies possible. I know it's advanced. I know it's a little bit out there. If you are making $1.5 million, maybe $1 million in your business net profit, and you've kind of exhausted all the other strategies, this is a very easy way if you're willing to kick the income down the road and not have it in cash right there on the spot. This is an easy way for you to defer those taxes, be able to claim 0%, still use that money to invest in good assets, loan it back to yourself after a year, and get away kind of with some really strong tax strategies here. Again, I'm not a tax advisor, but if you own a business, hopefully this was extremely helpful. This is some off the book shit that I've not really been told ever up until I started making a ton of money and financial advisors started telling me about this strategy, right? So hope you guys use it. If you need a connection, hit me up on Instagram, and I'd love to connect you with the people who do it for me. Otherwise, do your own research, and hopefully you start saving some money on taxes.